What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. And guys, today is a very rough day inside of the markets, and SoFi is getting hit very hard by that nasty downgrade, sell that we got yesterday in the after hours. And guys, it was hard to even find this, analyst downgrade in after hours yesterday, guys. It was very hidden, and it just looked like we got an automatic algorithmic, sell order right after the close because it was down 3% literally instantly after the close because I was watching the market close. And then today, of course, we got about 10 to 15 media outlets pushing that, downgrade just down everybody's throat. So you're going to get some retail investors, selling with the computer algos, which is, increasing the speed that you see the stock decline. So, what we're going to talk about today is this an actual buying opportunity? And I'm going to give you guys my reason why I believe it is a buying opportunity and the due diligence I have done, inside of this company. And guys, I want you to understand analysts come out, with downgrades all the time on multiple companies, but some of those downgrades are actually justified. I mean, legitimately justified as, helping investors out as a bad investment, guys. There is stocks out there, dozens and dozens of companies that have went public the last 3 years. And guys, companies have gone to zero. I'm talking bankrupt. I mean, dozens and dozens and dozens have gone bankrupt. You just don't see a lot of the, smaller ones that have gone bankrupt. But I'm going to show you guys, the reasons why some of these companies go bankrupt, so fast as they hit the public market, and why SoFi is, in a different realm, different category, not even going anywhere near, the bankruptcy category, and why I really believe that this stock is going to thrive in 2024 where we are at right now, guys. So be sure to smash the like button. Let's try and get the video to 1,000 likes so more and more people, can see this video. Don't forget to drop a comment. Are you buying the stock today? What do you think about the price action? And don't forget to subscribe to the channel. We're going to be keeping everybody updated on all the SoFi breaking news. Let's get into it. All right, guys, I'm filming this video at 3:09, so the market is still open. I just wanted to get a heads up on this video right away, and you guys can see the S&P 500 getting slapped around, Dow slapped, Nasdaq that tech heavy. Down 1%, guys, and exactly what we didn't want, the small cap Russell 2000 getting obliterated 2.4%. And then SoFi, as you guys can see, about negative 13.8%. We were only down about 3% in the after hours, just that little computer algos dump. But man, they ran hard with it, guys. And that's because this is pushed out to 15 media outlets, and you got that retail selling going on with the computer selling, which is a combination short sell. It just doesn't stop. Okay, there's so many small tricks that short sellers can do. And this one was a lot bigger than I thought it was going to be, guys. I was thinking like a 7-8% like we've seen before on some downgrades, but man, this stock got absolutely hit today. Market cap was clipping 7.9 billion earlier today, guys. I mean, we're back below the 2020 SPAC IPO. Yes, the IPO was a little bit, elevated. We were in a, bullish market at the time, but we're still, down from where we were at 3 years ago at an IPO, and the company has, tripled revenues. So it's just crazy, the price action we got, but let's get into it. All right, guys, so this is on Webull. This is just the updates going on for SoFi. We're going to start right here at 10 hours ago, guys, and you can just see SoFi falls, the Keefe and Woods underperform, price target cut, Dow Jones, Benzega, Reuters, Motley Fool, Seeking Alpha, biggest stock movers, Keefe downgrade, tumbles, stock slides, downgrades, Seeking Alpha, Reuters, investor plays, issues warning. This is why the stock is getting hammered. I mean, probably, I don't know how many people exactly, hundreds of thousands of retail. I wouldn't say millions, are just invested in the SoFi stock, but it could be 100,000. I don't know. But as you guys can see, I mean, this is what fuels the fire, guys. Technology among financial losers, stock crumbled. So everybody saw this nasty downgrade. I mean, this was very planned, in my opinion. It could have been planned for days. It could have been planned last week. All I'm saying is every single one of these media outlets had a planned article ready to go first thing in the morning, guys. And as you can see, after hours yesterday, there was nothing. It was already dumping after hours, and there was no news. You had to go and find this thing on like one media outlet. So as you guys can see, stock is getting hit right now. Maybe it bounces back a little, but we're gonna keep on moving. And guys, I want you guys to see, I'm really invested in this company. This is on my Twitter. 7,000 people saw this. You can see this is a buy order that I made. $8.40. Stock went a little bit lower. I also bought a lot more, a little bit higher. $2,000, 250 shares. So as you guys can see, I am, doing my part as a dip buyer. I thought this was a great buying opportunity. We were literally, headed for 11s in my personal opinion, potentially after this week, guys. And we were literally headed to 11s prior to earnings, is what I thought was going to happen. And then look at this, guys. They just come in and they just, knock it down. We've been knocked down, I would say, honestly, not messing around, 20 times in the past 3 years. Legitimate downgrades 20 times. Just the one guy from Wedbush probably put out 5 or 6. So, yes, guys, 20 downgrades in this stock is still right there on the verge of like $10. Okay, imagine if we didn't get the 20 downgrades, and we actually had people that wanted to support American innovation fintech companies, not back the legacy banks from 200, 300 years ago, guys. Imagine if we actually had guys pumping up a tech multiple, pumping up the innovation, pumping up the AI. You're not going to get that in America. There's too much big money behind banking, legacy banking. The same thing that Tesla was trying to do, against the legacy automakers. The same thing that Amazon tried to do against Barnes and Nobles, and then capitalize the entire market. Toys R Us. It just doesn't stop. Okay, we need to understand that no one is going to give SoFi a handout. Half of our analysts are bearish on the stock. Okay. We just got stuck with them. We got to just prove them wrong. Hey, if you invest in us, we're going to make you money. Okay. We are investing in the future. Marketing is expensive. Getting high quality talent is expensive. And that's why you haven't seen the earnings growth yet. But we are stealing market share. As you can see that I showed you guys, they have more checking account openings than Wells Fargo. That's a top 4 legacy bank. So this is why I'm buying the stock. Just remember, guys, I think, our analysts will eventually flip once they can't contain this stock any longer. And real quick, guys, I want you to understand that, analysts, some of them are out there to protect you and, help and retail investors out and give you a downgrade if it's, legitimate, guys. And I want you guys to see that stocks can actually go to zero. Companies that, thousands upon thousands of retail investors were invested in. Look at this, guys. Tattoo Chef. They went public 3 years ago. $1.4 billion market cap. And you can see as of right now, the stock, it basically went to 2 cents or 0.2 cents, whatever that is. The market cap is sitting at $16,000. I mean, there's literally nothing left. And you guys need to look at the last 4 quarters. We need to identify, why are these companies going to zero? Why were they getting downgraded? What was the reason behind? Look at the net income, okay? Negative 28 million. That's half of revenue. Negative 38 million, half of revenue. Negative 55 million, the exact same as revenue. Negative 19 million, almost a third of revenue. So basically what happened with, Tattooed Chef is they ran out of money, okay? They could not get, the net income over the, revenue in time, to turn a profit. And then, they ran out of cash and no one was there to back them any longer. Tattoo Chef intends to file for Chapter 11 bankruptcy. Boom. Okay, that's it. You got to get your net income profitable. 3 years. Remember, guys, SoFi has, went public the exact same time as Tattoo Chef, but they said, hey, it's time. We are finally going to start turning a profit. Guys, another company right here, WeWork. Company was valued at $9 billion, a little bit lower than when it was valued privately at 47, but they went public at 9 billion. WeWork, guys, 25 cents, 13 million right now market cap. Why did this company go to zero? What happened? What was the problem? Look real quick. Net income, half of revenue, negative 400 million. Net income, negative 264 million, a third of revenue. Net income, negative 300 million, almost half of revenue. And the last one, net income, just the same as revenue. Boom. They finally ran out of cash and no one was there to back them any longer. So yes, guys, companies can go to zero. SoFi can go to zero. You need to identify, is it going to zero or not? You need to do your research. Check the financials. See what they're doing. Why is SoFi posting a loss? WeWork, once valued at 47 billion, files for bankruptcy. And we're going to look at one more real quick just to show you guys. Smile Direct Club, another company, 4 billion going public to the market. Smile Direct Club, 0.068 cents. Market cap 2 million. Identify the last four earnings. Negative 20 million net income, 1/5 of revenue. Net income negative 21 million, 1/3 of revenue. Net income negative 21 million, 1/6 of revenue. Net income negative 20 million, 1/5 of revenue. They just couldn't figure it out in time, ran out of cash, no one was there to back them. Smile Direct Club shuts down after filing for bankruptcy. So guys, this is real. I want to show you guys this is real. I want you guys to understand that your companies that aren't your magnificent seven, they can go bankrupt. It is definitely possible. SoFi is still a SPAC investment. It still loses money. It's a bank. It's not profitable. But we need to identify, why are they not profitable? What are they trying to do? Do they have the cash to support them? So you guys can see on the earnings, if we just go back 4 quarters, that the net income loss, was 1/10 of revenue. On the other ones, I was saying 1/2, 1/3, 1/4, 1/10 of revenue. Another one less than 1/11, 1/12. Same thing. This last one was half, but we had the write down from Technisys. So you can see SoFi was, much more a gap on the net income to the revenue. They had a lot more space, but I believe, guys, they're posting these net income losses because they're investing, gaining market share. They still have, over $2.8 billion of cash. So just at a $40 million loss, do the math on what, $2 billion, how many quarters that could fund them, guys. That's, years, 3-4 years down the road. They don't need anybody to help back them on an investment because they're running out of money or something like that. So guys, the number one reason I believe that SoFi is different from those three companies that I just showed you, I guarantee you for a fact that those three companies, CEO and management, did not come out and tell you, we're going to strive for full year profitability next year, this year, 2024, guys. So we are looking like a grand slam. We are going into the S&P 500 in 2025, guys. That's the difference between those three companies that you just saw that went to zero. The analysts were right on the downgrades. That's the difference right now. Okay, the number one reason I'm telling you is the management is telling you right now this is going to be a profitable business. The reason why they're not profitable right now is because they are gaining market share, investing in the future, guys. So if I spend $170 million on marketing, imagine if they cut that down by half, guys. We're profitable 100 million every quarter, but you're not going to get your 600,000-700,000 members. You're going to get like 200, 300,000. They don't want to do that. They want to make sure they have compounding growth for the next 10 years plus. So they have to invest in those, those losses, okay? But they still have $3 billion to, fund those losses. But they're saying right now the time is up. They don't need to fund the losses any longer at that, pace. They have, so many users, they can start marketing to their users and cutting down on costs, okay? So guys, we are here. We are at the promised land. This downgrade you're getting, we could go into it, and the reason why it has to do with something about their fair value of how they do their accounting again. The interest rates affecting, the margins and stuff like that. There's just so many things. We're not even going to look at that, guys. You can do your analysis and look at it. It's just BS. I don't have time to waste, stressing myself out. I scan through it. I'm just like, this is garbage. This is what they do. We would have been making it over to $11 if this guy didn't come out with a downgrade. Take the time to understand what makes SoFi different and why they're not going to go, bankrupt like these other SPAC investments out there, because we were a SPAC. What makes us different? I think it's the leadership, and I think it's because this company is going to be profitable. I bet if you take the 1,000 SPACs, I bet less than 25 to 35 are profitable. So we're in the top 5% now. As of this quarter coming up. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Once again, my name is Kyle. Be sure to smash the like button. Don't forget to drop a comment, and don't forget to subscribe to the channel. Hope you have a great day.